Project-based organisation, so every single project has to be profitable in its own right. If I'm not aware of all the costs associated with the project, I can't tell which one's going to be a winner and which one's going to be a loser. And obviously in a small organisation, cash is king, so I very much have to have my finger on the pulse with regard to the cash flow. I think with any SME it's absolutely crucial, and I think every managing director has got a moral responsibility to understand exactly what financial state their company is in.
Throughout this series, we've got our wonderfully opinionated panel of experts on hand to give their advice on what they reckon makes good financial practice. We asked them how important it is to measure financial health during an economic downturn, which is obviously very, very important right now. And here's what they had to say.
Even if you don't have monthly management accounts, you should have at your fingertips maybe 2 or 3 key indicators as to how well you're doing, like the daily cash position or the break-even or employee costs. Very, very important that you know these things.
I think it's a question of relating these to an easily understandable number. So, for instance, we advise our clients to convert their KPIs, key performance indicators, into a percentage of sales, so they see the trend analysis. And it is monitoring that on a daily basis and understanding exactly where the cash is. And it's also having an understanding of where it's going to be coming from. So the projection is also bringing in the future sales. So you understand what you're going to be selling in 1 month's time, 2 months' time, 3 months' time, and you're starting to build up some trend analysis for the business.
I think what reinforces that as well is the position at the moment with the banks. The banks are more so than ever monitoring businesses' financial performance, and they'll often set covenants to do that. So it's key that the business understands what those covenants mean to them.
A lot of emphasis sometimes placed on sales and turnover. I think an equal amount of emphasis, if not more, should be placed on cash coming in, collecting what you've sold, and how much of it's turning into bad debts.
In the current situation, we've got businesses coming to us looking for loan finance, and it's quite scary really that some of them are coming along with accounts that are 12 months old with no management accounts, and they're looking for £250,000. You know, it doesn't help the business. They've got to go back to square one and work out all the figures. So it just shows you need to keep on top of these things. And
just touching on the point earlier, it is more important than ever, because if you've got one customer that doesn't pay, then, and you know, a big player in your company that not paying, that could just end the business. You know, so it is vital that you, as you said, you make sure the money is coming into the company, and you don't take your eye off the ball on that really at the moment.
I think if you have a business that is well run, we'll have less requirement to come to people like the NWDA and Business Link, purely because they are forward planning and they understand what the profitability of the business is going to be. They are tracking overhead down if required. If sales are dropping, they will track their overheads down because they're monitoring that on a regular basis. And it's the businesses that don't monitor that get a drop-off in sales. I mean, I've seen some of my clients drops in sales of 40 and 50%, and they've kept their overheads at the same level for too long, and that takes them into an insolvency position.
It does help you avoid having to take dramatic steps to correct you know, a situation that's got out of hand, because you can actually see where you're going and act sooner. I think that I think it was Gaynor said earlier on, simplicity is the format, and you don't have to have masses and masses of analysis. It is really 2 pages probably of analysis. You're looking at your sales, your gross profitability, break-even point, which people must remember changes on a regular basis, it isn't fixed, and taking that forward and looking through to where your working capital requirements are.
For businesses, taking the time to fully understand their financial position shouldn't really be as scary as going to the doctors. With a bit of planning and preparation, there's no reason why a regular checkup shouldn't result in a clean bill of health.